Good afternoon and welcome to today's discussion on weathering the effects of financial hardship, managing capital projects and reserve funds. My name is Matt Martin and I'll be today's moderator. Also joining us are panelists and my fellow colleagues, Matt Queasley, Southeast Regional Executive Director, and Michelle Baldry, our Northeast Regional Executive Director at Reserve Advisors. Between Matt and Michelle, they have 30 years of combined reserve study experience. They are responsible for implementing corporate objectives and managing regional operations for the respective teams of engineers and supporting staff. Today's conversation is focused on common capital project and reserve funding challenges that associations are facing due to the effects of coronavirus. With a huge surge of Americans being unemployed and an untold number with reduced hours, many of our friends and neighbors are experiencing financial hardship that's going to affect the way we manage our community associations. But regardless of economic conditions, association boards still have a fiduciary responsibility to act in the best interest of their communities. So with that, let's get started. Nobody in the community association industry is exempt from challenges that coronavirus poses. From association boards to property managers, and from landscapers to reserve study providers, we are all adapting to serve our association clients with the dependability and level of professionalism they expect and have come to rely on. Matt, what challenges have reserve study consultants experienced as a result of the current pandemic, and how are they adapting to meet the needs of their clients?
Well, thanks, Matt. Good question. I really think the biggest challenge for everyone right now is just not knowing what things are going to look like next week or next month or next year, for that matter. Fortunately, for the time being, most reserve study providers like us are still trying to serve a vast majority of our clients. We've made a few tweaks to our process, primarily for the on-site portion of our inspections. The site visit is where the engineer typically meets with management and the board to discuss the history of repairs and replacements of the community. We're moving a lot of our kickoff meetings outdoors or to a virtual platform like Zoom or Skype. While on site, the engineer also completes the condition assessment of the common elements. This is the most critical piece of a reserve study to ensure the accurate projection of the remaining life. Condition assessment inspection can still be completed in almost every case. If needed, we just ask for access codes or pick up keys ahead of time to ensure we can conduct the inspection with no close contact with others. There are properties that we can't get to at this time. Generally speaking, these are properties that are closed, outside service providers. Overall, the safety of the association members, management, and our engineer that's conducting the reserve study is really the utmost importance to us. And all projects need to heed the regulations and guidelines that are put into place by the various governing bodies.
Thank you, Matt. In some cases, associations are deferring the reserve study or considering deferring it as a means to quote unquote reduce discretionary spending or limiting expenses that they feel they could defer until 2021. Michelle, what advice can we offer those that don't know if now is still a good time to have a reserve study?
The scenarios like the one we're experiencing today is really the reason why associations set aside reserves. If homeowners are hard-pressed for paying their dues, they're certainly not going to be able to afford special assessments now or in the near future to address the critical capital projects. There's always an element of unpredictability, and having a current reserve study and adequately funded reserves helps associations weather tougher times. The reserve study helps prioritize every capital project. Boards still have a fiduciary responsibility to act in the best interest of their associations. Homes continue to sell and buyers are more aware than ever. They want to know that the financial health of the association they're buying into, as well as any major expenses that may be on the horizon. Increased communication with homeowners is also very important in times like this. Current owners are spending more time than ever at home right now and are more in tune with the property. The community association managers we work with are hearing from owners about the property conditions more than ever. And with budget season right around the corner, good communication and a comprehensive plan for repairs and replacements are going to be more essential than ever.
Thank you, Michelle. There are several challenges that associations are facing today as a result of current economic conditions. First and foremost, as mentioned earlier, many Americans are facing financial hardship. As such, associations are exposed to an increased risk of delinquencies. Matt, what impact does uncollected assessments have on an association's ability to effectively maintain its common property in the midst of a crisis?
Well, assessments are the lifeblood of every association, and the risk of the uncollected assessments is always present, but it is higher now. We haven't seen widespread delinquencies reported yet from our communities, but we do know it's a growing issue and is likely to get worse in the months to come. We are seeing significant reductions from revenue sources like restaurants or rental fees in some of the more highly amenitized communities that we work with. The potential for reduced income emphasizes how important it is for community leaders to understand the health of their reserves, as well as having insight to the upcoming near-term projects and their costs. I've seen many cases where associations have historically shortchanged the reserves, or currently they're way underfunded. We even have a lot of communities that have decided to have no reserves at all. And these communities are going to have a very difficult time maintaining the common property, especially when the economy is worse and delinquencies increase. As Michelle noted, if the residents are unable to pay their regular monthly assessments, they're likely not going to be able to pay for an additional special assessment when a critical infrastructure project is needed and the reserves are inadequate. With the uncertainty of how long these current economic conditions will last, many associations are looking to reprioritize some of their projects. This would help them offset revenues. Critical projects like replacement of roofs or balcony railings really should be prioritized over discretionary projects like carpeting or furnishings. Less critical projects may also be deferred or scaled back. Limiting expenses to those that are critical mitigates the cash flow burden resulting from uncollected assessments or decreased revenue. And it also affords association time to reestablish reserve funds for those projects in the short term. In addition to uncollected assessments or reduced revenues, borrowing from the reserves is also something that we're probably going to see more of. And that has, of course, an adverse effect as well on the association's ability to effectively maintain its property.
Thanks, Matt. You mentioned two really interesting points. The first, that there's an adverse effect on managing capital projects when reserve funds are insufficient or when an association may be tempted to borrow reserve funds for unrelated expenses, as well as the importance of focusing on capital projects as a means to offset reduced revenue. These are both really relevant points that I think we should speak to. So let's start with the latter point first. Michelle, when identifying critical capital projects, what criteria should associations use to prioritize those that should be addressed now versus possibly scaling back or deferring until next year?
We actually receive calls frequently from existing clients asking this very question, most recently just yesterday. And what I told her was, in evaluating the priority of individual projects, ask yourself several questions to aid in the process of identification. Would deferring a particular project jeopardize the safety of the homeowners? Deteriorating wood balconies, for example, can be a life safety issue and a major liability. And second, does deferral lead to a more costly repair or replacement? Woods are a good example of this. When roofing systems fail, the additional expense to address secondary repairs far exceeds the cost of proactively replacing the roof. At a minimum, roofs should be repaired where current conditions could lead to water penetration into building envelopes. This accelerates the rate of deterioration to not only the roof, but also to the roof decking, fascia, facade, and even the interiors of the units.
Thanks, Michelle. What types of projects could an association limit in scope or defer altogether if lost revenue is an issue and it's impacting their ability to fund all of their upcoming projects?
Oftentimes, there are discretionary projects that, if deferred, are limited to affecting the curb appeal. For example, common hallway wall coverings and floor coverings have no effect on the integrity of the building structure. The useful life or rate of which associations freshen up the common areas is really discretionary. Although some may take issue with the dated hallways, deferring a project of this nature allows associations to focus on more critical projects when faced with lost revenue. Another example is concrete sidewalks. Assuming a sidewalk has normal deterioration is not a safety hazard, further deterioration is generally isolated to that area of the sidewalk. Consider grinding down a trip hazard or even closing a section of the sidewalk as a temporary measure until you have the funding to take on the needed replacement of that section of sidewalk. As mentioned earlier, communication is key. Membership has an expectation that common property be maintained. Oftentimes, they're not immediately aware of the impact economic conditions have on their association's ability to address these capital projects as a result of lost revenue. It's important to keep homeowners informed of changing priorities and the reasoning behind it. Doing so provides peace of mind and streamlines future communications.
Thank you, Michelle. Before we move on, I wanted to discuss the point that was mentioned about borrowing from reserves to pay for other expenses, as this can have an adverse effect on an association's ability to maintain its common property in an effective way. Matt, can and should associations borrow money from reserves to pay for other immediate needs such as utilities?
I'd say only if they absolutely have to. It's really a best practice to earmark the reserve funds for the capital expenditures, the known items that we're expecting to pay, and to use them only for that purpose. However, there are cases where that's not possible. These boards are going to be faced with a difficult decision. They can either raise the monthly fees for everyone, which they have historically elected to not do. They can special assess the membership at one period of time, or if they're able, they might be able to obtain financing from a bank or other institution, which results in higher assessments or special assessments for a period of years following the obtaining of that loan. As Michelle mentioned, some capital projects can be deferred, but others cannot. And essential items like insurance, water, and electricity bills can't be deferred without putting the safety, use, and enjoyment of the common elements in jeopardy. In short, a failure to secure the funds to pay for essential projects or utilities is a failure of the board and could put the community on a potentially catastrophic path. So I'd say in those cases, sometimes the better option is to borrow from the reserves if you have them. While this might be a short-term solution, it'll ultimately leave a shortfall down the road. If you are considering borrowing from reserves, I strongly recommend consulting your attorney. There's state statutes and governing documents that dictate exactly whether an association can borrow from the reserves, and then specifying the mechanisms for borrowing them. Some states have very strict requirements. Florida, for example, where I live, requires a formal vote and approval of the homeowners prior to the board using the reserves for anything other than their intended purpose. California also requires disclosures to the owners and an obligation that funds are paid back within a year. Now, there are other states that have little or no requirements regarding the use of reserve funds, which is why it's important to consult your attorney to see if your statutory situation or your own individual governing documents would limit the use of the reserves or create any extra steps that you'd want to make sure you accomplished if you are going to borrow from the reserves, even temporarily.
Thank you, Matt. The last thing I wanted to touch on briefly today is how current economic conditions are affecting associations that historically have proper reserve balances and that complete capital projects in a timely manner. Michelle, how are these associations being affected by the current economy?
As I mentioned earlier, having a current reserve steady and adequately funded reserves helps associations weather tougher times. Several of our clients who update the reserve studies in a timely manner have sufficient reserves and have minimal, if any, deferred maintenance. They're finding themselves much better positioned to weather the current economy. In many cases, they're proceeding with the majority, if not all, of the projects that they had originally budgeted for in 2020, as the strength of their reserve fund allows them to do. We also have clients taking advantage of cost savings by completing next year's projects yet this year. This is possible because their reserves are very strong, they have minimal deferred maintenance, and they have a clear understanding of their near-term capital projects. These associations have the most flexibility with maintaining their property during financial hardship. They're also able to take advantage of bargains in the marketplace, as some contractors are looking to keep their staff busy and offering discounts on near-term work. Unfortunately, this isn't the first economic collapse we've experienced, similar to the 2008-2009 financial crisis, and it won't be the last. The more prepared an association is financially, the better position they'll be in when this crisis occurs. The most successful associations have a plan, which is supported by the reserve study. They complete capital projects in a timely manner, and they continually track or measure their progress and act to ensure long-term financial and physical health.
Thank you, Michelle. This does conclude today's discussion. Matt, Michelle, thank you both for joining us today and offering your expertise and insights on addressing some of these common challenges that associations are facing today. To learn more about Reserve Advisors, you can visit our website at www.reserveadvisors.com, or you can follow us on LinkedIn.